Good evening and welcome to Accendo Traders. This is our video trade plan for Tuesday, June 3rd, 2008. AccendoTraders.com, effective trade plans delivered daily. And we go through our routines each night to make sure we're on the right side of each trade. And we obviously want to make sure we have time to spend with our families. If you're new to our video, go ahead and stop it here and kind of get an idea what our routines are so that you'll be able to implement them for yourself. Today in the market, well, obviously we had a down day. I know I was sitting at my computer and they were talking to some hotel people, and then they broke the news about the Wachovia CEO being forced to resign, and the market was down already, but you can kind of tell that, okay, here's trouble in the financial sector, and what have we been saying, that the financial sector, because it's so heavily weighted in S&P 500, that it provides leadership, and so today it provided leadership to the downside. But on top of that, we also had that the S&P cut its debt ratings on Merrill Lynch, Lehman Brothers, and Morgan Stanley. What are those brokers? What sector is that? Financial. So we had a CEO forced to resign, another victim of the mortgage dilemma. We had a downgrade basically of some of the brokerages, more financial data. So it was just, even though we had some good ISM data, that was just too much, and so they really kind of brought the market down. 9 out of 10 were negative, and we did have some good information on the coal. Basically, these are coal, and MasterCard was upgraded, and then we had a downgrade on a gold stock. Tomorrow we have auto truck sales. We have some factory orders. I believe tomorrow we have some retail store data coming out, talking about the where are the consumers right now. You can see we've got some builders information, tolls before the market, Hovanian after the market closed, and we still have our split play that's going to be splitting later next month. So with that, not a lot of news, but we do have some. This is going to be interesting, how the market responds to the same store data. Let's take a look at our flag list from last night. Okay, as we look at the market, obviously we had a down day. You can see the NASDAQ bouncing off the 20. The Dow bouncing off the supports kind of put in by last week below the moving averages. Let's check and see if it's bouncing off anything here. No, not off the 200. Let's check the 100. You can see, there we go. The Dow finding support at the 100, and the S&P sitting at the 50. So what does that mean? Well, obviously we had a down day. We're retesting the lows of last week. If we break this lows from last week, that is certainly bearish. You can see the buyers did come in and bring us up on all of these. The buyers did come in and push it up. Same thing here. But obviously what we want to be watching is if we break the last week's lows, the support put in by last week, then that's definitely a bearish sign, and we need to adjust our trades accordingly, tighten up our stops, and look at some stocks to the downside. Go ahead and take a look at what we're unflagging and flagging. The basic scenario that I'm going with here is that I want to be in stocks that are trending at this point. Some stocks even went up today regardless of the move of today's action. So I unflagged some stocks basically because they were wishy-washy. We had huge wicks at the top. I mean, you take a look at LTR, we got these 2 days of the wicks up there. Another one like that is, I think BHI is like that. What's it doing up there? MDR is like that. MTL. So what I'm looking for, although these are good trending stocks, I'm looking for, look at Apple. That's a trend for you. Look at WLT. That's a trend for you. Look at
it's
WLT.
8 o'clock.
That's a great trend. So I want to be in stocks that are trending. Even in this market, that's right. I'm looking for stocks that are trending. And even one of my favorites, X, stopped trending and don't know what it's doing, so I unflagged it. So really, my basic decision for being conservative today and off of today's action, my reaction is I don't want to be this guy up here. I don't want to be this guy up here. And we talked about this. I don't want to be this guy up here. So if we're not still trending, if you're not showing me a good chart, I'm not worried about what you're doing. I'm not going to be in there. So Apple, great trend, hasn't violated anything. It even had good news today. So I'm holding on to that. AKS, good stock. Basic Materials is weakening. So this one I'm actually going to unflag. I'm not sure what Basic Materials are doing right now. Busey, good chart. Keep my alert at 72. CHK, I like the fact that it's bouncing. It still went up today. And even though this is not as great a chart as Apple, you can still see the move. So keep your alert at today's high. CLF, great chart. Look at that. CNX, great chart. Coal stocks were upgraded today. You can see that it kind of closed with this wick from maybe last week, the week before last. So you got to determine your own risk on this one. Obviously, this is moved off the moving averages. You know, that's one of our safe entries. And so normally I would unflag it, but you can see that we're possibly breaking higher here. We're above 100. So I'm going to keep a flag for right now. CLP, still moving nice. JCPenney's, look at this doji at support here. Look at that doji. This stock could go either way. I would bracket the stock. RIG, still showing weakness, but also made a doji at the 50. It made a doji. Look at this indecision at the uptrend line, support at the moving average. Not sure which way this one's going to go. So again, look for stocks that have good trends and stay in those. Use tight stops. And okay, so now we're ready to begin the education part of our video. Trading the Zone is the book by Mark Douglas, and we're in the second chapter, The Lure of Trading. And yesterday we talked about the unwillingness to create rules, and today we're talking about failure to take responsibility. And I think they go hand in hand. Many times we don't create rules because we don't want to be responsible for our trades. I was talking with Dean a moment ago, and it turns out he and I used to be in the same trading room back in 99, 2000. And it was internet plays, IP Jimmy and Ski Trade, and you know, I made a lot of money, lost a lot of money. And the funny thing about it is that, you know, after that, I was trying to buy a house and all kinds of things, and I got greedy, didn't have a trade plan, and didn't know why I was trading, just because they told me to trade. And it was interesting because, I'll be honest with you, I didn't trade for 6 years after that experience. You know, I was scarred. You know, we were talking about, you know, I get it. You know, I've been there. I'm not here to say that every trade I've made has been successful. It hasn't. And that's why I've learned, and that's why I'm so big on trade plans, because I get that that's it. You know, if you, without that, you're doomed to be inconsistent, and you're doomed to blame other people. And that's what I did. You know what? IP Jimmy put me in that bad trade. You know what? Ski Trade told me to buy that. And nowhere in there was I saying, you know what? I lost money because I have no clue. I lost money because I was a zombie trader trading what people told me to trade. So Mark goes on to say in this part about the failure to take responsibility that trading is an experience or personal choice with an immediate outcome. You have to choose to enter the trade. You have to choose to exit a trade. So in a way, there is a beginning and middle end. Unlike the relationship that we made with gambling, where you're forced to stay in for the beginning, middle, end. In trading, you can make the beginning, middle, end go faster or shorter, however you want. And every trade with that immediate outcome is based upon our interpretations of what we see. It's our interpretation of that data, or our interpretations of following this guru, or our interpretation of following this system. So, you know, if we're not willing to be responsible for the outcomes of this interpretation that we made, we're in a dilemma, because we want to be consistent, we want to make money, but we don't want to do the steps to be responsible. We don't want to do the steps to be consistent and to create rules to be consistent. And all we want to do is to blame the gurus. You know, again, I've shared many times that I've been in this chat room, that chat room, this Yahoo group, that Yahoo group, and you know, it's just funny to me. A lot of them, they start off strong, and then as people start losing money, or the market gets harder to trade because you have no system, or because it is choppy right now and it is frustrating. If you allow it to be, you know, but if it is what it is, as Mark McNamee says, it is what it is, New Yorkers. You know, then it is what it is. You know, go on, life goes on. So. The reality is that trading, the reality of trading is that you have to start with the premise of no matter what the outcome, you're willing to be responsible for that. You have to realize that there has to be rules, there has to be a system to provide the consistency to be able to replicate, to repeat why you were successful with each of your trades. I just want to say, as to get the full version, go to subscribe podcast.html. Our weekend wrap-up video yesterday was 30 minutes. There is value in getting the additional segments. Feedback, thank you for those who do it. And again, if you haven't, go read the article by Dean Callahan, Why Every Trader Needs to Have a Trade Plan. Excellent. More to come. Thank you, Dean. And I will see you guys tomorrow.